So how much do you really know about price action trading? Did you know that the daily price action in many instruments can offer up some really solid trading opportunities? So what do price action traders do differently? Well, price action traders analyze price movements to decipher the probability of one thing happening over another. Now, human behavior, algorithms notwithstanding, is what moves the market, and it's believed that this behavior repeats itself and it's reflected in the movement of price. And you can profit from this behavior. So one way to think about it is that everything else is based on the action of price. Price is where it all starts. So knowing that, it makes sense to have at least a basic understanding of price action and the structures that it creates. Understanding that price action patterns exist, they come to be due to human behavior, and that this behavior encompasses emotional extremes, trading price action is a bona fide method of tackling the markets. So let's see price action trading with the Euro futures contract. That would take a long time to do justice to price action trading, so the best way to cover some aspects of it is to talk through a Euro futures trading session. Now, January 8th was the day that the NFP, which is non-farm payrolls, was released at 8:30 New York time. Now, this is a release that can cause extreme volatility in the market, but it can also offer up some potentially good trading after the initial shock has a chance to work off. Now, I admit that when I started trading years ago, I would attempt to trade the releases. It was hit and miss, and I quickly realized that that's not something I was ever going to be really good at. Now, anytime these events are scheduled, I do my best to avoid them. This daily chart shows a strong thrust from the lows, which was a double bottom. This completion also hit a measured move objective after demand line break from 10:15. Now, the range starts as a double bottom with lower highs, and although price breaks support, it's being bought back up 2 days prior to the thrust. So this just gives us some context of where we find ourselves when we go down to the lower time frames. Now, this is a 5-minute Euro futures chart, and it shows the areas of interest during the trading session. Now, because I was only looking for short-term plays because of the added volatility of the NFP, I used a short time frame to seek out potential opportunities. Now, the price target is a combination of measurements from the range break to the low of the momentum red candle to a tested resistance level off to the left. And it falls just below the high of the session at the time of the trading. So what did I see after the NFP release? Well, obvious profit taking occurring after the news release, and then sellers try to take the market back down. Once the march higher begins, some structure starts to form, which then can form the basis for a trading opportunity. There was no trade at the first push forward because at that time there was nothing to base the trade on. And I'm going to use the 2-minute chart for the rest of the coverage for better detail, but in reality, the 5-minute was used until price came close to an area of interest. Now, the resolution of the price action occurring after the release allows the opportunity to have a structure that will be needed if a trade opportunity presents itself. Dissecting price and the tale it can tell is vitally important to price action trading. There are several trading strategies in one. There's not just one thing we're looking at when we're trading price action. A confluence of factors is important, and it can take into account support and resistance strategies as well as basic price patterns. Now, you'll notice an upwards trend line, and some of you may be asking why the low of the release was not used. Now, it would be in a bigger picture analysis, but however, there are only so many extremes. Inside of the extremes is where you find the gold. Now, notice that there were 4 hits on the line up to the trade entry. Heavy hits matter to the relevance of not only trend lines, but horizontal support and resistance lines as well. When one is used for both support and resistance, you want to take notice of that when price meets it again. Now, keep in mind that multiple hits don't equal strength, but quite the opposite, especially with horizontal lines. And when you find zones that are used for both support and resistance, that's a zone that you want to take notice of. Also, think of how price moves on your chart. You see a strong thrust move, and then a channel. Price breaks a channel, making a strong move, and then we head into a channel again. Looking inside the extremes of the channel, you'll often see multiple hits at certain locations that will highlight where the important areas inside the channel are at. If you just focus on the extreme supply and demand lines, there will be a lot of missed trading opportunity to pad your P&L. So going back to our chart, price thunders upwards, and it leaves us with a structure that we can use. The solid small black line, it's measuring the pullback high to low, and it's going to be used once price begins another pullback, and we'll see if there's some equal in distance symmetry. Now, we also have a high that rejected price that we can use for a possible retest. A pullback begins, and we overlay the line now marked with a dotted line, and we look to see if the pullback will terminate close in distance that occurred with the previous pullback.